Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was July 2023. We are a national buyers agency with offices in Sydney, Melbourne, Brisbane and Perth. We believe there is always an opportunity somewhere. We help you be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. Operating through 3 decades, our experience will ensure no sleepless nights worrying about property markets. Now let's get to it. On this channel, we talk about all things property, but most importantly, I spend my time reading the news to separate the fact from the fiction, so you don't have to. Okay, let's move on. Now, first thing I want to look at here is the amount of total listings across a rolling 28-day count for the combined capitals. As you can see down there in the red, I've highlighted that the amount of properties for listing, for sale at the moment, is currently 23.3% below the 5-year average. And that 5-year average is that dotted line that you can see just above there. Now, we are currently also 18.3% below the same amount of properties for sale last year. So again, despite what all the experts were saying, we can see that the amount of properties for sale is actually dropping, not going up. And there's a lot of reasons why that's going to continue to happen. This also shows that the vacancy rate, so the amount of properties that are available for people to live in, has also dropped quite significantly. So the amount of properties that are available for people to live in has dropped from an average of 2.8% down to 1.2%. That's a 57% decrease in vacancy rate over the past 10-year average. So it's pretty crazy. And you can see again, we need more supply because there's just too much demand at the moment. And that's going to continue to push up. This is the gross rental yields for dwellings. And I've highlighted Perth and Brisbane there because you can see above the combined capitals, 3.6% is kind of the gross rental yield average for the income that you'd be getting on a property. So $1 million property at 3.6% is going to pay you $36,000 of income. Now we can see there that some of the more expensive cities like Sydney and Melbourne are well below that 3.6% amount, especially Sydney. But Brisbane and Perth there at 4.2 and 4.9 are quite attractive, and the price points are attractive too. And since we've had 12 interest rate rises since May last year, you can see why more and more investors are focusing on capital cities that are going to provide them with that higher rental yield to minimize risk. Let's talk about interest rates. I know everyone always gets upset about that, but at the end of the day, it looks like we are holding again. Yep, that's right. Yesterday, the Reserve Bank of Australia has decided to maintain the official cash rate at the current level of 4.1% as inflation continues to track lower and household spending slows. Since reaching a peak of 7.8% in December 2022 quarter, the annual rate of inflation has begun cooling faster than expected, with the latest consumer price index easing to 6% in June 2023 quarter, and that's down from 7% in March. So while that's still well above the RBA's target of 2.3%, updated forecasts released on Tuesday this week predict that the CPI will ease to around 3.25% by the end of 2024 and be back within the target range of around late 2025. So we're fine. Some economists actually expect that the cash rate will return to the low 3% mark by the end of 2024, providing some relief for borrowers who have seen their monthly repayments jump almost 60%. And that was since May 2022. So the Commonwealth Bank is actually tipping a cut in the cash rate by the RBA from a peak of 2.6% starting in late 2023. And Westpac and ANZ also expect a terminal rate above 3% with cuts by mid-2024. So again, some of the big people are saying they think it's going to drop. If we want to have a quick look here at the winners and the losers for the month, CoreLogic's Home Value Index, their HVI, had a great month in July actually, rising 0.7%. This marks the 5th month in a row that housing values have been recovering. And that's not all. Since reaching its lowest point in February this year, the national HVI index has increased by a solid 4.1% overall. So this is pretty impressive growth, and that comes after a 9.1% drop from the record highs back in April 2022. So the real estate market is showing some pretty positive signs, and across the whole country, even though home values have been steadily improving, they still haven't reached the peak that they had in April 2022. So as of now, they're still 5.3% below the record high. So there's still a lot of breathing room to go. In July, Perth and Adelaide and also regional South Australia actually hit new cyclical highs in dwelling values. I'm not a huge fan of regional South Australia. Don't mind Adelaide. I love Perth at the moment. We've been saying Perth for quite some time now, and it just continues to keep hitting those highs and going above that. And I think we've got years of that to come. Not months, but years of that to come. This is the rolling 3-month change in dwelling values for state capitals: Sydney, Brisbane, Perth, Adelaide, Melbourne. That top 3 spots, what I usually try to focus on. I think that Sydney will run out of steam sooner or later and start to drop down. And I think it's going to be a fight between Brisbane and Perth as to which one of those takes the top spot overall. And this is a battle that I think is going to probably go on between the next 3 to 7 years. Now, Australia has claimed the title as the most popular destination in the world for high net worth individuals. So that's HNWIs with more than 1.47 million or $1 million to invest. I'm just going to move my head here so you can see there some of the numbers. I'll just drop it down here for a second. So a new report shows that 3,800 high net worth individuals moved to Australia in 2022, representing the biggest influx of any country worldwide. And the figures are set to be higher still for 2023, with the total amount now going up to 5,200 high net worth individuals expected to arrive. And that's according to Henley Private Wealth Migration Report 2023. Quite a cool report there, actually. Let's have a quick look now. Low stock will definitely continue to be an issue. According to the latest estimates of NHIFIC, Australia's housing sector could actually face an undersupply of about 175,000 dwellings by the year 2027. And this housing shortage will undoubtedly put additional upwards pressure on housing prices over time as demand continues to outpace supply. Now, where are the majority of those high net worth individuals coming from? If you guessed Nigeria, unfortunately you'd be wrong. It is China. So Chinese buyers are snapping up Australian real estate, spending more than $6 million per day with Australia and even more popular markets like Canada and the United Kingdom and the USA going second place. So Australia's beating all of those. The Federal Treasury Foreign Investment Quarterly Report that was released in May actually shows that China-based buyers purchased 1,775 Aussie homes valued at about $2.3 billion between July 2022 and March 2023. So that's topping the list of offshore buyers, definitely. Chinese investment has actually increased by about 71% from $191 million per month, that was in 2021 to 2022 financial year, to $328.5 million per month. And that's only in the last 7 months now. So keep an eye out on that. Really interesting figures coming out there. I want to finish this with just a few quick examples of some properties that we purchased. This was an owner-occupier purchase that we did. I'll just move my head again. It just seems to get bigger and bigger, doesn't it? I'll make it small. We purchased this owner-occupier purchase for a client only recently within 10 kilometres of Sydney CBD. We were looking for 2-bedroom units up to $750,000, proximity to transport, infrastructure with a good layout and functionality. Now, this property we purchased was built in 2012. It's a 2-bedroom unit on the 3rd level. There was no air conditioning noise on the balcony, which was really important to our client. They wanted it to be nice and quiet. It's a 12-minute walk to the train station, 4-minute walk to the River Golf Club, the Rowers Club. So lots of good amenities there. Close by an Aldi and a Woolworths, multiple restaurants. So we're really happy with this purchase. There's 84 property units in the complex. So 2 entrances as well, lower ground secure car park. The strata fees were only about $1,080 per quarter, so really attractive there for the seller to hold. The seller wanted... for the buyer, to hold. The seller wanted $760,000, but we knew what the value of the property was, so we successfully negotiated $25,000 off that that asking price to $735. But we were not finished. Upon actually reviewing the building and pest inspection and the strata report, we were able to reduce the offer again by an additional $10,000. And we also placed some conditions in the contract that some minor repairs were actually undertaken by the vendor prior to settlement. So remember, just giving you an example, we charged the client 2% for our success fee to do this work for the clients. That was $15,200. However, we saved the client an additional, as I said, $10,000 after we already shaved off more than $25,000 for the clients. That's $35,000 in savings for that client, and we were able to purchase this property for them within less than a month. So really, really happy on that. The rental estimate for this apartment is $850 per week, which actually gives the client a really impressive 6.09% rental yield on this property. Now, the suburb that we purchase in is experiencing limited apartment stock for sale, and most two-bedroom apartments are actually going for $760 into the early 800s. So to get this at the price that we got it at, we were really, really happy with this outcome. Don't worry about the numbers. We'll go into that in one of my other videos here. Classic growth strategy here for this next example, buying in a premium location with large land component in a suburb with above average 20-year capital growth. We purchased this 322 house on a large 807 square meter block for $960,000. Beautifully renovated, open plan living area, perfect for entertaining, modern kitchen, generous dining area that opens onto a large outdoor patio for entertaining, which is great. Clients are receiving $750 per week, which is the equivalent of about 4%. Now remember, we didn't buy this property for income, we purchased this property for growth. However, we did look at Brisbane for the client because rental yields are on average 16% higher in Brisbane than across the combined capitals, which makes it a little bit easier for our clients to service the loan for the long term, because this is a buy and hold strategy. Property was 12 k's from Brisbane CBD, just minutes away from local shops, schools, public transport, easy access to major highways and the city, and also the airport. The investment was easy to rent, and will definitely be low maintenance for our clients and has huge development potential in the future. The long-term capital growth rate for this suburb is 8.92%. So although past performance is not an indicator of future performance, we are confident that this property should be worth around $2.1 million in the next 10 years, okay? And that increases our clients' wealth by more than $100,000 per year for them holding on to this asset. Now, this is one of my superstars. This is Brian. He's one of my buyer's agents in WA. He's a handsome, very well put together individual. And this is Brian after he secures an amazing deal for our fantastic clients. And let me tell you a little bit about one of those deals. So I'm using the Google Map image to show you this house because we bought this property before the photographers had a chance to take any photos. So this was an off-market deal, no competitors, okay, for us in regards to this purchase. We got this property at $389,000. Now, our appraisal was between $380 to $410. And we believe that if we had been in competition with other buyers or other buyers' agents, this property would have easily gone into the low fours. Now, interestingly, I actually read an article recently, and the data suggests that off-market home sales usually result in lower prices. So economists at REA Group-owned company Property Track found that advertised properties achieve about 4.3% higher price points than off-market properties. And these numbers were also confirmed by Ray White's chief economist. And Ray White estimates that selling a property at auction instead of private treaty can also add as much as 10% to the sale price. But apparently, sellers don't know this. So let's just keep this between you and I. It'll be our little secret for a little while. Anyway, back to the property. This property has had the same owner all of its life. And they've really treasured and taken care of it. It's in wonderful condition. The elderly owner is in a position where they didn't want to take it to market, have strangers coming into their home, for open homes. So we love a win-win. This really worked out well for the seller as well in regards to just protecting their privacy and not disturbing them on a daily or weekly basis. It's walking distance to a major shopping hub, public transport, public and private schools. This purchase was brought to us by an agent that we've been in touch with for quite some time, and he does a lot of off-market properties in the area. So really glad to get a win with this agent as well. Rental figures are great. $450 per week gives us a really attractive 6% rental yield. Annual capital growth in this area is a healthy 4.7% per annum. Now remember, we didn't buy this property for the growth side of things. This property was income. We sought out this property type because our client would like the option to place a second dwelling at the rear and supercharge their income. So this is actually the second property that this client has purchased from us in only 2 months. And their first acquisition was a growth property, which offered average rental yields, whereas this purchase is focusing on income. And the plan being that in the next 10 years or so, this client will sell the growth property that we purchased for them a couple months ago, okay? They'll sell this property in 10 years' time. They'll pay off this high rental yield property. Hopefully they would have done their second dwelling by then. And that will provide a supplementary income for them that will pay that client over $70,000 per year. That is, in a nutshell, how you make money. I hear about all these different strategies all the time. This is it. Growth and income. Combine the two. One is not better than the other because you'll hit your borrowing max ceiling quickly. You need both. You need to diversify. So this client is absolutely wrapped with the strategy because we've seen the outcomes before and it works well. Remember, we can't help you until you commit, and once you commit, we won't let you fail. So we're bringing two things together here. Your desire to build wealth and our 18 years of experience buying properties. For more than 3 decades, Providence have helped Australians open a life of opportunity through real estate, giving them the future that they want. So we buy unique, quality assets in areas where demand outpaces supply. We focus on property that appeals to a much larger market of owner-occupiers, 70%, and not just investors, 30%. And we buy in the right capital cities at the right time, guided by economic property cycles. We buy the property which is uniquely suited to your situation, which will act as a springboard to your next wealth building stage. This is how top performing investors build wealth, people. And I'm going to tell you again and again every single month. If you like what you've seen here, you want to be kept in the know with the Australian property market, make sure to like this video, hit that subscribe button so that you'll get notified again of it. If you want to continue your education journey, we've got some free ebooks that we're happy for you to download. I'll put the link in the description below. I want to thank you for your time today, and I will see you next month.